Hey guys, so as usual, all information on this channel is for educational purposes only and is not intended to provide financial advice. Blah blah blah, don't sue me. So in this video I wanted to go over some of my bread and butter cloud strategies that I use in my day-to-day trading. If you haven't watched the ETH Cloud video, intro video first, go back and watch that and then come to this video. All of these strategies are applicable on any time frame in any market. You got to remember the highest time frame always wins. Fundamentals and market events like the Brexit today usually trump any sort of TA, technical analysis. All these cloud strategies complement each other quite nicely as well, which you'll see. So the first one I want to discuss is the edge-to-edge strategy. First introduced to me through Rob Booker in a YouTube video, so shout out to Rob. I will put his video in the description. The idea is that if the price enters the cloud, it's going to touch the other edge of the cloud at a bare minimum. So the highest probability trade is the touches of the cloud edges. Okay, now obviously the bigger the cloud edge, the bigger the width, the bigger the target profit. So you can see here, you open on this edge, you go to this edge, and you close, and you can reopen here on the Kumo breakout. This just happened to work out really well. This is from January 20th, 2015, when I first learned about this strategy. So I go through here. Any of the green thumbs are when it worked out. Okay, so here to here, you're good. Here to here, you're good. You get stopped out here. Now your stop would be dropping out of the cloud in the same edge that it came into. So you're good here. You're good here. Now this is actually just a straight Kumo breakout because there's no cloud. It's super thin. You'll see this sometimes on the Kumo twists. Sometimes it's like dead on exact on the Kumo twist. In this case it kind of is. So you're in this trade the whole time. You get a double bottom here. You'd probably close. And then you get another edge to edge here to here. You get another edge to edge here to here. You'd go long on this Kumo breakout. You get the idea. So here's another stop out where you get a close in the cloud and then drop down out of the cloud. The key is to wait for the close in the cloud. If you jump the gun, you're going to decrease your probability. And like I said, your stops can easily just be the cloud support and the target. The target can also be horizontal resistance. Usually it lines up with the cloud depending on your time frame. Here you can see the entry and exit just lines up with the horizontal here. So like I said, highest time frame always wins. This is an S&P on the weekly. This was August 23rd. We had what I considered a close in the cloud. Okay, this was the day before it happened. I didn't play this, but I was watching it. So the prediction was we'd hit this zone, okay? And this was the next day. We wicked scarily into that zone. And again, you can say there was a horizontal there. That's fine. It's still an edge-to-edge trade. So but you get the idea though. Any time frame, any market, highest time frame is better than lower time frames. So this is Bitcoin. This was a September 2015 chart. This is when I got super excited and noticed a massive edge-to-edge opportunity on the weekly cloud. Okay, this played out. It is nuts that it played out, but it played out. We're now sitting somewhere at 680, okay? Between 640 and 680. It is absolutely nuts that this was predicted September 2015 when we were at $200. Now this took a little foresight on my part to see that the possibility was there, but it worked out. So the other part of this edge-to-edge thing when the Kijun, which is the mean, the 50% fib, when that's closest to the Kumo, that's a really good entry signal because it shows that your resistance is really close to your 50% mean. And if it breaks through both of those, that's again, it says that it's going to go higher. Now, obviously, we closed into this, moved down a little bit, and then we went sideways for a while and then broke up. So here's, again, this is a multi-exchange, what I call the cloud piercer. This was, I don't have any dates on this, unfortunately, but October 25th, 2015. You can see as I flip through the various exchanges, you can see all the closes in the cloud. So again, that's a long entry signal. October 2015, long entry signal. Next strategy I want to talk about is the Kijun bounce, which is interesting because the Kijun is always the mean. It's always the 50% fib of any move, depending on your time frame. Okay, so you can see here we had a large pullback December 12th. I don't know the rest of this, obviously, but you're welcome to look that up and let me know. But the point is, you want your bids closest to the Kijun, okay? Or if you are short, you want to close your short closest to the Kijun. There is always a high probability that a touch of the Kijun will occur on every trend. Okay, any market, any time frame, higher time frame always wins. We have May 19th, 2016, perfect bounce on the Kijun. Again, you can say it's a horizontal. That's fine. I don't remember where the rest of this went. I think it goes sideways. May 19th. I'd have to check that. The point is, if you're not in this trade up here, your bids are always down here, okay? You're always moving your bids up, and eventually it's going to get hit. Okay, this is on the daily. This is UJ, which is Forex, on the daily. You can see we're in a downtrend. This was May 18th. You get Kijun touches after Kijun touches, okay? You have your Kumo breakout. Forex loves to go through some stops, so if you're playing this a certain way, you'd open here, you get stopped out here at the Kijun, breach of the Kijun. That's generally my rule. So whether or not you actually get stopped out here or this is an entry is debatable. This is more likely an entry than a stop out. This was at 109. I think we dropped below like 99 today. I don't know, with Brexit craziness. Yeah, so that's that one. So this is Bitcoin on the hourly. You can see we have this nice trend. This is June 5th, just the other day. Nice trend. Again, bids are always at the Kijun, this sky blue line. So your bids would be here. It's harder to say where your stops would be if the cloud is this far away from the Kijun, but they'd likely be a horizontal somewhere in here. It just takes some discretion. So your bids would be here. Where you'd close is up to you. Again, you need some discretion there. If you see this triangle forming, you need some discretion whether or not to place bids on the Kijun again. You'll see that it drops below the Kijun into the cloud. That's a hard stop, definitely. We get a TK recross bullish in the cloud, which isn't quite a long entry signal, but a Kumo breakout is a long entry signal, so you could theoretically get long somewhere in here. You'll notice the Kijun the whole time. If your bids are there, you're good. We follow this trend up. Depending on how you play your stops, if you recognize this candle as a shooting star, you'd probably close. The fractals that I showed you in another video, you'd close, etc., etc. Again, your bids are at the Kijun. We get a bounce. And again, you get another triangle formation. You'll see this over and over and over again. Trend, Kijun bounce. So trend, bids, if you're short ever, which you shouldn't really be in an uptrend, unless there's certain conditions being met, your close should always be around the Kijun. So this one again, I wanted to talk a little bit, 2 seconds about TK crosses again. So we have a cross, bull cross and a bear cross, hard stop, and a recross bullish above the cloud, which is the most bullish signal you can get. It suggests continuation after a pullback or sideways. So the next one is the C clamp, which I talked about on Twitter recently. This one also has a bear div, higher highs, lower low in the RSI. We're looking for a Kijun bounce here. Again, these strategies complement each other. So the C clamp is when the T and the K lines are far apart. And that suggests that we are overbought. So not only is this overbought, but there's also a bear div. It's April 21st. It extends a little bit. I don't remember exactly. I'd have to check exactly, but this is April 27th, so 6 days later. You can see the Kijun here. Again, that's a C clamp. We have some RSI consolidation. I'm watching this OBV level. I also noticed there was a rising wedge in this. So see, rising wedge, we dropped out of the wedge, we hit the Kijun almost exactly again, dropped out of this RSI, OBV flipped red, okay? So you can use all this with your oscillators, and it all complements each other. So back to currently, today, a few days ago, 22nd, I was expecting a bounce on the 50% fib of this entire move, which is the Kijun. You'll notice we hit the Kijun, but we also blew past the Kijun, which can happen. I mean, these are high probability trades. They're not slam dunk 100% trades. You can see now we have this dragonfly candle, and I'll do a separate candle video one day, but this isn't called the dragonfly. There's hard rejection, super long wick. We also have a cross of the daily RSI, which hasn't happened since before the beginning of this trend, into the oversold range. So right now I'm feeling pretty good about the bounce because of the candle, the RSI cross, and a touch of the Kijun from this insanely overbought move. Again, there was a C clamp here. We talked about that on Twitter, calling for a pullback. So those are the cloud strategies I use on every market, every time frame in my day-to-day, coupled with oscillators of various degree and some candle patterns and chart patterns. So if you have any questions or comments, leave them below. Like, subscribe, and share the video. Thanks to the new subscribers, and happy trading.